This is the monetary policy coverage right here on ET Now. Kaustubh Gupta is here with us from Aditya Birla Mutual Fund, and Ashwini Kumar Tiwari is also joining us, MD SBI. Mr. Tiwari, what are your reading of the policy commentary this time? One section of the market was expecting some change, or at least flagging of the change in stance, given what's happening globally, beyond the rates as well. And then we talk about other important parts of the speech.
So our house view was that there will be no change of stance or no rate cut at this point of time, because the food inflation continues to be high, and therefore the stickiness of that in the overall scheme of things, and the uncertainties globally as well as in the agriculture side in India, those are drivers that there will be no change in stances. That was our house view, and I think that has been borne out.
Let's talk about the part which caught my attention first was the liquidity issue going towards. He went on to say that the banking sector is facing liquidity issues to the extent that if not addressed by innovative instrument, etc., it could become a structural issue. And even the top-up loans for in home loans or gold loans. What are your thoughts around that commentary?
So my sense is, see, the as the governor clearly said, that it is the role of the RBI to actually point out any build-up of risks, any part of the financial system. So therefore, earlier when the NBFC growth and the personal loans were growing very, very fast, they had flagged it a couple of times and then they came out with some measures. And that has resulted in the moderation of those segments. But within those segments, again, for example, the stopper fee, which he flagged, I think they are seeing a system-wide strong growth there, and that's why the concern that is it being used for for speculative purposes, as he explained, and are all the norms of end use, etc., being implemented. So that it's the role of the regulator to point out these risks, and banks should take care and then follow the norms so that there is no buildup of any fast growth in speculative areas there. So that was one part. The other part, of course, is that he acknowledged that there is a challenge with deposits. Last 8 to 9 months, last 8 to 9 quarters, we are seeing the loan growth outpacing deposit growth, not only percentage-wise, but in some cases even in absolute terms. So there clearly is a challenge. Banks have increased interest rates on deposits significantly, but yet the deposit growth is still lower. And that also points out to two things. One, of course, which he said, that the alternate investment scenario where the people are investing in stock markets and also mutual funds. Overall, that is a good thing, but there again, the speculative buildup could be happening. So he said that that's why the banks are facing this challenge. And short-term raising of bulk deposits or non-retail, as he called it, is clearly not a sustainable and stable way to fund loan growth, may lead to structural liquidity issues. And I think that's right, because ultimately the retail deposits are the most stable, and therefore the banks need to focus on this. Innovative instruments, etc., of course, we work on that. We are continuously examining which segments of the retail side, the society, we are still not able to tap fully. And I guess that these things are all forcing banks to look at those segments, which perhaps may not have been appeared very attractive earlier, but now we should focus on them and see that they are the ones from whom we raise deposits, rather than trying to find the easier ways. So this is a system issue, structural issue, and everybody needs to work on this.
Absolutely. And Mr. Tiwari, that's exactly what I wanted to ask about. At your end at SBI, given that you're country's largest banker, what is it that you're doing to try and propel and resurrect deposit growth?
So there are 3-4 things we are doing. First of all, that we don't have as much of a challenge as other banks, because our loan to deposit ratio is still below 70. Our excess SLR is, as per the last published number, is in excess of 3 lakh crores. So we have those cushions and buffers, and therefore we don't face this much of a challenge as others do. So what we are doing is that, one is that we have raised, our wealth platform is something we are working on strongly. We have appointed a lot of relationship managers, and we're working to actually strengthen that, so that the segment which we have been missing so far in a big way, that is something we are trying to fix. That is one part. Then in agriculture, we have launched a series of very innovative products which go alongside the deposits of the farmers and the farmers collectives, etc., and those are helping us not only in the loan side but also on the deposit side, because they keep their current account with us, etc. So there are various ways in which we are trying to address this, and this is a long term. I mean, it was not that we are doing this only in response to this situation. This is something we have been focusing on for some time. Similarly, with the vendor finance and dealer finance, these are again loan products, but all of them come linked with a current account, and by offering the good transaction banking services in those, we hope to get some current accounts, especially after the government's balances have reduced significantly through the SNA and CNA system, whereby they are doing just in time. So I think we have been working on this for some time, and as far as we are concerned, we are not facing that much of a challenge, but it's definitely something we need to continue to focus on.
The other thing, Mr. Tiwari, because you, out of all, would definitely have the best handle on this, and not just banking and financial, but you have a hawk eye on all industries. What is your own sense of whether or not the rural recovery is actually seeing green shoots, and how far away are we really from an across-the-board recovery when it comes to the rural end of the economy?
So as far as we are concerned, actually, we have seen in the last 4 quarters very strong agriculture growth. The last number was around 17+%. So we are seeing good growth. It's just that some segments change. So for example, our basic segments have been the self-help groups, which again are largely focused in the rural areas, and also the high-value Kisan credit card loans, etc. So we are seeing strong growth. And if you add this, the numbers, the so-called high-frequency indicators, so TVS Motors, I think, published their two-wheeler sale numbers 2 days back, and they have seen a very strong growth. So there is the rural recovery which we see coming back, and same thing has also been said by some of the FMCG companies for this quarter, that the growth prospects look good. So my sense is that the rural growth is coming back, consumption is improving. And of course, whether it has reached the levels which we want and whether it is sustainable is something we have to see. But with the agricultural growth doing good and the monsoon has improved significantly, I think we are in for a better rural performance than what has been in the recent past.
Very much for joining us today, Mr. Tiwari, with your take. Kaustubh, closing comments from your side. Especially, I want to talk about signs of green shoots on capex from private sector. Are you witnessing that from your markers or indicators that up till now the public sector was front loading the capex and capital formation? It found mention in the budget as well. But now from here on, the part of the cycle from the private sector will tune in.
So this is still a hope rate that is being playing out on the streets. Because if you look in terms of the capex data, it's just a maintenance capex which has been unleashed by the Indian industry. Although the balance sheets both at the corporate level and the lender levels have cleaned up quite a bit, but it is without much of a leverage. Mostly, I would say, through acquisition cost and through some of the sectors which doesn't have much of a multiplier impact. In those industries that we are seeing some bit of capex. We hope that as the capital situation improves and the consumption comes back, probably the capex side of the story will play out.
Right. All right, Kaustubh, we'll let you go on that one. Thanks so much for joining us on the show today. This was a special telecast for the monetary policy coverage. Before we